I think the first half of the year has gone up very strongly. The quarter three start also has been good. As you know, the festive season this year has actually got shifted. So there is the Sera that happened in October and the Diwalis happened in November, unlike last year, where both festivals fell in October. So like for like comparison for October would not be fair. But if you look at October plus November, I think we're still looking at a strong double-digit growth. So the quarter three numbers also seem to be going pretty well as of now. What we had projected over a 3-year period was actually 8.5% CAGR growth on NOI. So all the projections that have been done at the time of the IPO have been done with an 8.5% CAGR growth on NOI. Our own estimate is that seeing what's happened so far, I think we'll probably do better. So far, we are ahead of projections in FY24, and we hope to continue that. If you look at organic growth, it's essentially the NOI growth. It consists of, like you said, rental growth. So if you look at the first half of the year, we've actually done almost 200 plus deals. The uplease is at 24%. So whatever we've released has seen an escalation of 24%. In addition to that, all leases have a 15% escalation over 3 years, which means 5% escalation every year. In addition to that, we have what we call a revenue share. So any lease would have a revenue share clause as well. So if, let's say, the brand or the tenant does better than X in terms of revenue, there's a revenue share percentage as well. Out of the total rentals, about 13% comes from revenue share. So if you look at all these three components, which is increase in contracted rents, which is 5% a year, look at roughly 20-25% escalation at the time of releasing, and an increase because our top line growth has been 18%, so the increase in revenue share is also significant. If you put all of that together, you are looking at double-digit growth in rental for sure.